Imagine walking into a bank. You're greeted with a smile, free coffee, and a brochure promising financial freedom. You leave feeling like you made the smartest choice of your life. Now imagine this. The same bank charges you hidden fees, invests your money in risky ventures, and makes billions off your misfortune. You never see a single dollar of that profit. This is the world of big banks. And then there's the alternative, credit unions. But are they really any better? Or is this just another illusion? Right now, this question matters more than ever. Interest rates are rising. Inflation is gnawing at savings. Debt feels inevitable. People are looking for safe havens, for places where their money actually works for them, not against them. Big banks have been dominating for decades. They promise convenience, digital apps, and a veneer of trustworthiness. Credit unions? Smaller, slower, and often ignored. Yet they claim a different philosophy. Not-for-profit, member-owned, community-focused. But philosophy doesn't pay your mortgage. Fees do. And interest rates, well, they tell a different story. Let's break it down.
Big banks operate on a simple principle: make money for money. They take deposits, lend them out at higher interest rates, invest in complex financial instruments, and skim profits along the way. That's why checking accounts are mostly free, so long as you don't overdraw, miss a fee, or need help. Credit unions, on the other hand, are technically cooperatives. Members deposit money which is lent to other members. Any profits? They're supposed to go back into the community. Lower interest rates, better services, no shareholders pulling dividends. Sounds perfect, right? Less greed, more fairness. But here's the kicker: scale. Big banks have millions of customers and billions in assets. Credit unions? Usually thousands, sometimes tens of thousands. The math of their business model works differently and sometimes uncomfortably. Here's where it gets interesting. A big bank might offer a savings account at 0.5% APY. A credit union might offer 2%. That's 4 times more. But here's the catch. Big banks use your deposits to generate massive revenue elsewhere, often in ways you can't touch. Credit unions can't compete with that scale. They have to balance generosity with survival. Loans tell an even darker story. Credit unions often approve loans more cautiously, with lower interest rates, but smaller credit unions have limited capital. That means fewer mortgages, smaller business loans, and less ability to absorb financial shocks. Meanwhile, big banks can lend aggressively, risk defaults, and still survive. So the math isn't just about who pays more interest, it's about who has the muscle to survive a crisis and who can't. Public perception loves credit unions, not-for-profit, community-first, ethical banking. Social media and local campaigns paint them as heroes in a world of faceless corporate greed. Reality? It's messier. Some credit unions are brilliant at serving members and keeping costs low. Others struggle to modernize, to offer competitive digital services, or to scale efficiently. And some even charge fees that surprise you, albeit less aggressively than big banks. Meanwhile, big banks are vilified in headlines for bailouts, scandals, and opaque practices. Yet, for everyday banking, depositing checks, paying bills, or transferring money, they are unmatched in convenience and reliability. It's a paradox. The villain often feels safer than the hero. Looking ahead, the choice between a credit union and a big bank isn't just personal, it's systemic. Credit unions help keep the financial system decentralized, injecting competition into local economies. They protect against monopolies, predatory practices, and the too-big-to-fail mindset. But they are fragile. Economic shocks, regulatory changes, and technology gaps can hit them harder than giants. Big banks, by contrast, wield immense power and influence. They shape interest rates, drive lending trends, and indirectly control how money flows through society.
Choosing a bank isn't just choosing a service, it's aligning yourself with a machine far larger than any individual. So, are credit unions better than big banks? The answer is, it depends. For interest rates and a sense of ownership, yes. For convenience, scale, and resilience, maybe not. Here's the final twist. The system itself is designed so that both exist, both serving different appetites, both keeping the other in check. The real question isn't which is better, it's whether you understand what you're really signing up for when you deposit a single dollar. Because in finance, as in life, the safest-looking choice can hide the most surprises. And that's the uncomfortable truth.
Like and subscribe for smart money tips.